Welcome aboard everyone to another live session on today's price action for Bitcoin after a pronounced change of market trend with sizable moves. We're going to be addressing the point of stress with other contributing factors that may give us an interpretation as to where the price action may go on BTC. Of course, many interpretations across the board are portrayed in the market, right? From the market participants, bulls, bears, each one of them presenting their own argument. The ultimate game, fundamentally speaking, in trading becomes to make profit in a consistently manner. So we are going to approach the same way we have been doing for the past few years, okay? For those who are new, welcome aboard. This is Marble6. I am a harmonic pattern trader. And on this session, we are going to be looking at the technicals based on harmonic ratios on the current price action for BTC, where we are, and what levels we broke, because there were key levels to hold that was for the upward traction or continuation of the upward move for the bulls to keep holding the support level, the key psychological level at the 60,000 region. Of course, we went below, right? 4,900, I believe, was the low, depending on your exchange. Here on Binance Future, we reached 48,888. Please note that none of these constitute financial advice, but rather an interpretation of the technical information. Everyone, once again, thank you for being here. Peter Shippers, hello my friend, welcome aboard, and everyone else who's watching behind the scene. To start with the chart and the technicals on the price action for Bitcoin, it's very important to note where we were, of course, as we normally repeat, where we are, what levels were we expecting in the room also, and where we are within the current market information, right? We are trying to approach the market, as you guys know, with an unbiased perspective, with new market generated information. And this is why we're here now, trying to also portray our views so you guys are aware of what is going on within the price action. Of course, as I said before, none of these represent financial advice, but rather an interpretation of the technical information. So what is this chart that you guys can observe in the price action or on the screen? This W formation is a variation of a typical M and W, correct? This is a bearish shark pattern that oftentimes, depending on market conditions, it generates a continuation structure. This chart, in an ideal scenario, we're looking for the support levels from the lows, the C leg of the move, 53,400, to the highs, only to put the entire context as to where we were looking for, okay, and where we are currently in the price action. The key levels where Bitcoin needed to hold was the 50% and the 0.618, okay? When we were here in the upper 69 and 70,000, the correction here was already within the cards. We knew there were variables for the bearish structures that were signaling cautionary moves that needed to be approached. However, based on this W formation, we knew that the 50% and the 0.618 were key level for us, harmonic pattern traders. And of course, after these levels were violated, penetrating below, as Harold M. Garley would say, penetration of the prior low indicates a shift in trend. Can this be the case? Let's see where we are, okay? We certainly broke below the key technical level at the 0.618, also below the 50%. Why these levels are important? These levels, for those unfamiliar, once again, indicate a continuation structure, meaning that if prices would have found support at the 50% or the 0.618, we were looking for other arguments in the event of more upward traction. We also presented the jumping across the creek that ended up resulting in a dumping across the creek, right? Nevertheless, that upward move from the spring action gave us indeed an upward traction of 31%. Okay, so very important also to note where we were before, not only now, because we were looking at these levels from the 58,000 region to the highs, right? And those levels, as you guys can observe in the previous chart from nearly 2 weeks now, those levels were presented in advance also, right? And of course, when we were at 70,000, the approach was more to be cautious, as we could have reach 71,000. Okay, so now that we achieve 70,000 region, the very sharp pattern indeed was respected here, despite of our approach for potential support. I'm sure this was not only us that were looking for potential support at the 0.618 or the 0.50. Now that we have new information, because we never really know what's going to happen in the market, anyone who's pretending to know what is going to happen next is selling you some cookies. Okay, so 50% retracement in the 0.618, of course, violation of these levels, right? But by the way, from time to time, some of them may get it right and inflate their ego, right? But trading, again, is about making consistent money in a very neutral approach, right? So now that we are here, where did we reach? Speaking of a very sharp pattern, we also printed now this reactive move comes here at the 0.13, the 1.13, the fib extensions from the previous swing low to the highs, where in a similar manner, Bitcoin printed another variation of an information. Swing high, swing low, swing high again, back to the lows, back to the highs, and overspill at the 1.13. Also, Gann talks about this overspill levels that is very difficult or complex to know where the exact level may stop due to the selling or the panic within the selling pressure, right? There's a lot of testing is going to occur where many interpretation is going to define the boundaries of the next trading range. So this is where we are, and we are looking at the current information, right? Despite the previous sharp pattern at the 58,000 with projection to 70,000, that indeed occurred. However, now we have new information, right? Now that the key support levels was violated at the 0.618, something to point out here is that these levels are now becoming resistance. You guys know that previous structure resistance becomes support, and vice versa, right? When certain levels are breached or the change in character occurs, as many other analysts put it out there. Okay, so now let's move with the new information. Let's remove here the very sharp pattern that was indeed respected to also portray the levels that we were looking in the room. Besides the sharp pattern, we were also aware that we had the ascending run formation. This is a Bukowski pattern, also mainly from Richard Schubacher. However, Bukowski did his research that when these patterns present themselves, is very important to be aware that a shift in trend may start occurring. And what happened next? Clearly at defined levels. We were giving the arguments for the bulls to hold 50% in the 0.618 at 60,000, basically key psychological level. That level is now out of the cards, violated. Where we are next? Once again, we reach the 1.13, so therefore we have another information in a similar context. Okay, in a similar context here, because many are already calling for a bottom. I personally never really know when that will be, right? If you guys have a crystal ball, let me know where I can get one of those. Okay. So now from the previous high, we approach again the price action levels by levels. From the C, okay, the C to the D, we apply the same Fibonacci retracement tool, where the key levels or the immediate harmonic ratios become a common areas of retracement. The 0.382, that we are indeed now creating that reactive move, the first test of type 1, the first reactive move. The reactionary move occurred at the completion point of this chart, testing now nearly the 0.382. Now the 0.50 and the 0.618 here in a similar context as the previous support now becomes resistance, right? So Bitcoin can still navigate, in my opinion, all the way to the 0.50%, 60,000 now that becomes resistance, basically, right? 59,500, or the 0.618 being the key technical level, okay? Within this context, within this hourly, or not the hourly, the 12-hour or the daily, even the daily time frame. Okay, the key psychological level, now that we breach below the inflection point, plenty of resistance here in this level. We of course would like to recapture those levels, but we're moving accordingly, looking at the greater scope as to where Bitcoin may go on the weekly. Okay, now that we are finding resistance. Okay, so for that level we move once again level by level. Even once again, if Bitcoin managed to retrace back to the 0.618, let's say arguably, right, either the 0.50% or the 0.618 within other variables, now this sum will become resistance, maybe to construct another downward pressure and head much lower. Now that we tested the 48,000, 49,000 region, the mid 40s remain now in the cards, right? That was always also within the context. However, we were moving accordingly because that expectations for many was also expected the 40 when BTC approached 56,000. However, what did Bitcoin? Bitcoin printed another 27%. Of course, we need to move accordingly. At the previous low, another projection in the 40s. What happened next? Another 31% move. Now we are getting closer and closer and closer, right? So we are moving accordingly. We're not projecting or not making any forecasts, right? Pretending to know everything, but rather moving accordingly, because once again, what we do here is mainly technical and we approach the markets objectively. Okay, now where we are on BTC on the bigger time frame, if we move into the 3-day time frame, okay, you guys already know, potentially those who are plotting harmonic structure, we anchor the previous vertical line here on the prior support, okay, 38,000, because why that level is important? That was a previous higher low before this major upward traction. Okay, so from that low we anchor once again the previous low, because we're moving into price segments mainly. Okay, so from the lows to that high, right, where did we go? We reached the 0.707, another harmonic ratio that found support, or buyers stepped in at the 0.707. Okay, they stepped in. Now the 0.620 at 52,000 is being recaptured. Can this be only a false breakdown for the major parallel channel that it was also plotted as a flag for many? Can that be the case? Only to test that lower trend line, not the flag, but mainly the descending broadening. Okay, that makes more sense given the consecutive pinpoints in the price action in the upper trend line as well as the lower trend line. Okay, that makes more sense for another continuation structure. Okay, based on Bukowski once again. However, previously about since May, right, many analysts in the space were projecting a price again a 43,000 region. That was always within the context, right? But we need to first break levels by levels, because what happened that time did not occur for many, since we found support and reached 27% higher, right? In a similar context, at the previous low, another support. We're at the supply zone of this ascend or descending broadening formation, right? 31% move did not meet the criteria for the one expecting 42. However, now that we are printing this idea, that could potentially, I would say, right, because we never really know any confirmation here, affirmation, speaking with objectiveness is more reliable rather than speaking in certainties, because certainties does not exist in trading, my friends. Okay, at least this is what I interpret in the markets. Okay, so now that we have these anchoring points, right, previously this one was a key level, the B point for that BAM, right? Rather, we printed an upward traction, right? So now, can this be symmetrical? We can connect the new information. I normally like to track the new information, meaning discernible highs, discernible lows, discernible highs, back and forth. Okay, so if that's the case, if we print the discernible lows, meaning the lowest point within this context, okay, that is the 38,000 region. We anchor the X point within the harmonic framework once again back to the highs, and the lowest point wasn't this one, right? Now we printed a new lower low than this previous low. So to me, this one now become the B point of what could potentially be a Garley pattern at the 0.886 or the 0.786 at 47,285. Once again, please make sure to check your chart or your broker to know the precise move in a similar context, once again, from the lows to the highs. Therefore, the deepest levels of retracement also matches with your numbers. Roughly 47, 46, maybe arguably, will be the completion point of this pending bullish Garley, and of course the 0.886 apologize, at 43,000 region. You guys give me a second. Apologize everyone. So this is what we have now in the price action for BTC, okay? So certainly, again, once again, if we go to the completion point, these levels now become also, looking left, market leaf clues, okay? Horizontal line, we can plot where the support level may be found here. Anchoring in a green horizontal line, that can be a level of support from the previous resistance. You guys remember that was a short execution back in early this year, I believe, right at 49,000, 48,000 before the correction at 37. Now potential support, okay? Again, based on market structure. So now, if that's the case, if previous structure resistance becomes support, can that be the case for BTC? Absolutely. That is a level that I would likely track, the 0.786 or the 0.8086. If you guys give me one more second, please. Apologize. Apologize, my friends. I'm having a cough here in the background. Maybe someone is in my back noticing these levels. Okay, so now if we go to those levels, that give us a risk to reward ratio, right? Where the execution for a long opportunity may be worth taking it. Again, none of these represent financial advice, but rather an interpretation of the technical information. So looking left, what do we have at those levels? Previous structure, again, resistance from March of 2022, resistance, and inflection point. What is an inflection point in mathematics? Basically a line where the curvature, the sine waves tend to deviate, right? Either upwards or downwards. You guys can clearly observe here that after rejecting, the curvature or the curve in the price action plotted with candles deviated towards the downside. We pierced through, not before testing as resistance, prior to finding some turbulences here, nearly 20% decline before this last leg of the move, and now the correction is occurring after major upward traction. So now we are going to be approaching the markets very objectively. Why? Because if bullish structures, okay, please be mindful here, if bullish structures are starting to underperform, then this oftentimes give us information that something larger is constructing on a larger time frame. What did we have on the previous 2 months, I believe? We noted that there was indeed a bearish divergence, class A. We were aware of this, right? We mentioned that let's approach the markets objectively, knowing that the divergences were occurring, or was printing, was developing in the price action for Bitcoin. If I go into a different chart here, potentially on Bipstam, we can observe more data points, precisely. Higher highs in the price action. This was presented in the room. Everybody knows about this, right? Therefore, we are being objectively approaching, or we are objectively approaching the market, okay? Despite of the support levels, we were looking at 60,000. Of course, that didn't occur. However, once again, the long approach from 56,000 to 65 and 200 was my stop loss. After I got my trial stops were triggered, and I was of course out of the longs at 65 and 200. We went to 49, and now I'm looking for other variables. We were already looking what the next support may be. So being out of position after profit taking is also being in position, okay? Especially after taking profit. That is the main approach. Profit taking and also extracting the opportunities that the market present to us traders. So now the divergences on the monthly remains there, right? Undoubtedly, that divergence, bearish divergence on the monthly remains there. We are observing that the daily and the 4-hour patterns are underperforming, okay? Now that I notice here, we don't have divergence basically, but convergence on the daily with price action printing lower lows on both momentum indicators, MACD and the RSI. Okay, so now basically BTC can still navigate to 50. I believe the lows here was from the highs. Once again, depending on your exchange, please make sure you're anchoring the highest point at 70,000 back to the lows. Bitcoin can still navigate to once again the 0.38 57,300, 59,700, and 62,000 as resistance, right? Because we are now below the key technical level at the 0.618. So these levels are now becoming resistance. Therefore, if that's the case, we then have the argument potentially to print this major information that is pending as of now. Pending, why pending? Because until the completion point reaches the PRC, the ideal scenario, the terminal bar, either at the 0.786, 46,000, or still even at 45,000, right? That will be the PRC of a major bullish rally based on the daily. However, we would like to see other variables along the way, ideally class A bullish divergence that can give us that argument and strengthen the approach for more upward traction. But ideally, in the meantime, what I will do, considering that we printed a new lower low than the previous low, right? You guys can observe here that that level is also another inflection point. Previous support now is becoming resistance, at least for now. And you guys can do this very simply, or simply plotting the resistance line at the wicks, which represent the session lows for that date, or the candle closes, where it's basically where traders set the prices, right? That was the close of the session. Now, areas of resistance. The ranges from current levels, 56,000, the candle close here at 58,000 resistance, 59 all the way to 60,000, where remains the liquidity zone now for traders to move the prices higher, and then maybe continuing the downward pressure that we have found on BTC. Okay, there is a day that we were looking on Bitcoin. We can do this live also if I go into the weekly session to have a better argument. Okay, I'm gonna remove all of this, and I'm going to use the previous low, the 24,000, the last long we have presented last year, I believe, in August, last summer, at that region. That level was a previous low. Okay, so if we anchor the trend-based fib time, also this is based on Rover Minor, that it is only a correction of this upward traction based on the weekly, we anchor once again the trend-based fib time from the lows, okay, from the lows to the highs, back to the highs. What can observe here? What can we observe here? Clearly, the important price action was respected. Where first at the 0.382, right? The time axis for the 0.382, highlighting here the highs, also the 0.618 recently, based on the weekly, that was printed with a dragonfly doji, a Japanese candlestick that was suggesting cautionary move here that was indeed respected. Now, when and where is the next price or the next important price action? The next one will be pretty much in October, okay? October the 7th, or the week of October, based on the weekly. There are other important price action based on date and time that we're looking, or time and price, I'm sorry, date, of course, synonym of time. The next one will be in October, prior to the election, right? And if this is only a corrective phase of the major move based on the weekly, now we're talking into the major time frame, the weekly, not necessarily the 4 hour, neither the daily, but rather the weekly, where primary trends are often printed. So we have indeed up until October, right? Starting in August, September, and October to define the new support levels if BTC is going to indeed print that major pending early before another continuation of the upward traction. We will see. Nobody really knows what's going to happen in the markets. As I said before, many of us may have an idea, right? An argument as to how high or how low BTC may go. And then, of course, our ego get boosted. We are the geniuses in this field. And unfortunately, trading is not about forecasting, my friends. Of course, it helps, but trading mainly and fundamentally is about making money consistently. And this is where we are on BTC, all right? To finalize the stream, I want to make a brief comment also as to why making consistently money is very important, or making money consistently is important, right? Because that is what is going to keep us in the long term to keep trading. Moving into the S&P 500, very briefly, many of us are seeing what is going on in the market. The crash again, all the crash callers are jumping into the boat, making their predictions. However, slow down, take it easy, my friend. Let's see what occurred here, okay? On the weekly, many of us already know, we're aware that this major W formation, okay, major bearish butterfly on the weekly was printed on the S&P. We were tracking this entire move from the lows, okay, favoring the longs at the time, going against some other market participants, right, against our will almost. However, we move into a daily time frame and we presented a short execution in advance, right? Last month or in June and July, we presented these levels, and those levels were now achieved in the price action for for the S&P, okay? So our targets for, based on the daily time frame, only to finalize the stream very briefly for those who are unfamiliar, that we track all markets across the board basically. We printed the execution between, there was a range, the highest point in overspeed level we're tracking was a 57.03, okay? That was the last entry for the short. And where did the S&P 500 go? 57.21. A few points less than 1% from our projections. All the targets were met. Again, this is all presented in the room. This was a swing trading, okay, strategy. We first reached the 0.382, the 0.50, and the 0.618, again, based on the daily. However, given the size of the move, of the weekly structure, we have other variables in the larger time frame, right? Because these levels are not yet reached, okay? So for that, my friends, we again achieved the entire move. I believe there was some are believing that this is a news-driven event, but again, perhaps the interpretation is what the competing forces are always arguing. Right now, we have a SAM rule. I believe that we are entering a recession, which, by the way, once again, to finalize the stream, my friends, we were also looking, if you guys remember, those who are here in a long term or who have been following us in a long time, we were looking at the Fed funds, right? The interest rate, I believe last year also, we presented the argument based on the cyclical rhythm, right? The cyclical rhythm here, July 16, if you guys allow me 1 second, this chart was presented last year also, right? Now that we are here after a year and nearly a month, we were tracking that if the same, once again, the heartbeat of the market, based on this particular chart on the Fed funds, the interest rate, we're going to follow, once again, the same cyclical rhythm, right? The pulse of this market rhythm, if that's the case, if that was going to be the case, then we will see a pause in the interest rate since last year, starting last year at 5.25 with a maximum of 5.50, which this one, once again, was from July 16. There was no rate hike since then, but rather a pause, right? And where are we now? Periods of risk are coming. We mentioned 2025, 2026 being objective. Now many or others are changing once again their projection for a crash from 2022, 2023, 2024, and now again 2025, right? This is not how trading works, my friend, okay? So let's respect the technicals, let's respect the data, the interpretation of the market information is crucial, okay? So now, once again, if this is the same case, that could indeed give us, if we move to the current chart now, because that was from last year, if we move here into the Fed funds, once again, where are we? We indeed respected that period of flatness. If I go back to my chart from last year, you guys can observe here, July 16, period of flatness, where normally the Fed start pausing rates before the periods of risk. Are we entering that time? We're approaching. Therefore, we are being careful because there is the major W formation on the weekly for the S&P that you guys were aware and took the short on. But that can only be the type 1, meaning the first reactive move before another test or break higher. And then maybe only then we will see if we are indeed entering in a larger correction. However, it's being a long journey for the bulls, and we're also being friends with the bears, okay? So don't lean too much on one side only, but rather focus on making money consistently. Everyone, conditions change, and we must learn to change our mind, as Gann suggested 100 years ago. Thank you guys for being here. If you guys are next content, please follow us, marbob6.com. Join the Discord if you like. If not, once again, welcome. I'll see you guys in the next one. And remember to live a life with an attitude of gratitude. Cheers, everyone.